The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading, and you got markets picking up barely in the red. Quite an acceleration yesterday, right? You're talking about basically just more than 1% from the lows early yesterday. When I started the program, about 42.50. Close out the session at just above 43.04. We did actually tick a little bit lower. You got a technical close of just under 4,300, I believe, on the S&P futures at least. Right now, we're trading just below that level. You see, we've been chopping around about 10 to 15 points overnight. NASDAQ 100, pretty similar action. You're talking about a move of about 200 points to the upside. That's almost 1.5% from the lows of 13,500 to 13,706 yesterday. We're trading at 13,644. The Dow right now, negative by 60 points. We almost make it to 34,000 near the close last night. And then late last night, and we got the Russell negative by 5. Bitcoin, just under 24,000. Quite a run early Monday, late Sunday night, 25,270. It's been chopping around since then. Ethereum, they've got what, a merger coming up or a transition of some sort. Ethereum hovering just under $1,900 at $18.91. We jumped to gold, pulling back yet again. Gold right near yesterday's lows. Gold trading at $17.90. You're off $8 on the session. We were just at $17.85. Silver down 27 cents at $20 on the dot right now. And you jump to notes and bonds. Got a little bit of lower price and higher yield. The 10-year right now. Interesting that we are basically back to where we were at the start of yesterday, right? Yeah, the 10-year trade up basically half a point. And then last night, it started to give it up at about 3 in the morning. The 10-year right now is negative 8 ticks. That's a yield of 2.82%. The yield on the 10-year, we jump over to the VIX. This VIX, we got a 19 on Friday. We also got a 19 handle yesterday. We're elevated just a bit over 2009 for the volatility index. And you take a look at this thing on a daily basis, right? Quite a pullback from the market lows. In the indices in the middle of June, you had the VIX trading at 35.05. It's been a one-way trip, folks. And what I'll say is you're looking at all the way back a full year. Okay? We haven't been back to, what's the low here that we're coming into? 1845, folks. We are just near that low from April, let alone we haven't seen anything below that level since January when the market sell-off really began. January 4th, we came into that market sell-off at about 16 on the VIX. We then spiked from 17 around January 13th. And we've seen that area barely. I mean, we're back to the lows of April 20th. We're back to the lows of February 9th, right? Keep it in mind, folks. The VIX, I don't imagine, retreats forever with the volatility still present in this market right now. All right, let's jump around to some of the stocks that are moving this morning. It is earnings season. We got a big week of retail earnings this week. Kick it off with Walmart. One of the equities this morning, and Walmart, they're going to be trading higher. There's a daily. Okay, we're going to open at 138 right now. 138, right at the 382 line, and that's basically almost right where they gapped down on their last earnings. Interesting, right? Which is why I pulled this up on the daily at first. Now, Walmart, talk about a cascading effect, man. Their last earnings event over the period of 3 days, you go from 148 down to 121 over 4 days. You go to almost 117 on May 19th. But from there, we've risen, and you're basically going to be right at the bottom of that gap of 138.55. But Walmart, they got good numbers, and they stick with their guidance. They stick with the second half outlook as earnings beat expectations. They reiterated the outlook for the back half of the year. Profits have been under pressure. But it is wooing more middle and higher income customers who have turned to the discounter for low-priced food and essentials because of inflation. It's amazing how round and round we go, right? How is Walmart doing okay in this economy that has a company that basically services lower income earners at a very small margin, right? They serve the most amount of people at the smallest amount of margin. And what are they doing right now? they're able to court people in higher income brackets because of inflation boosting their business. Sales grew more than 8%. Profits tightened in the fiscal second quarter. Getting into the numbers, $1.77 versus $1.62. And how about revenue, man? Beaten by $2 billion. 152 versus 150. Folks, this is in 90 days. 90 days, this company's pulling in $152 billion. Net income in 90 days, $5.15 billion. Not bad. Up from a year earlier, right? Same-store sales, 6.5% growth in the second quarter. Higher than 5.9. It is absolutely amazing how these big box retailers continue on a yearly, quarterly basis, whatever it be, rise same-store sales at a remarkable degree. When you're servicing, most of these same-store sales, right? You're experiencing growth only in population growth. I mean, maybe certain areas there is population growth beyond that, people moving there, but in other areas there's people moving away. Anyway, e-commerce sales up 12% compared to a year ago, 18% on a 2-year basis. Low double-digit comp sales growth in grocery, high single-digit gains in health and wellness, and they're selling through the excess inventory. Inventory levels in the U.S. were up 25.6% in the second quarter, mainly due to increased costs of goods and higher levels of general merchandise. Reduced the number of shipping containers in the system by more than half from the first quarter levels to bring them much closer to historical averages. Great numbers all around, man. And Walmart may be a bellwether here of what to expect. We got Target tomorrow. We're going to jump into Home Depot, which is up with their numbers as well this morning. All right. Second quarter earnings beat expectations, and they also stand by the 2022 guidance, right? So we got Walmart and Home Depot today. We get their sister or brother companies tomorrow, the little smaller, maybe little brother, little sister, as in you get Home Depot and Walmart today, you get Lowe's and Target tomorrow, along with some other retail companies later in the week. I think we get TJ Maxx as well. We get John Deere on Friday. We got Foot Locker on Friday as well. Home Depot getting into their numbers. 505 versus 494. They beat on profit. They beat on revenue. Not bad. And you reiterate the guidance, right? I mean, talk about getting over some humps, folks. These are huge, some huge companies, and you're supposedly dealing with wage inflation, input inflation, right? Same-store sales, 5.8%. The market was looking for 4.9%. Total customer transactions slipping, okay, so less transactions, 467.4 million, but the average ticket grew 9%. They're keeping up with inflation, man. Professional contractors tend to make fewer visits and purchase in higher quantities. Home Depot servicing those. Sales per retail square foot grew 5.7%. Man, they're just growing across the board. Net income, $5.17 billion, and they expect total sales to grow about 3% for the year from a year ago. We jump over to Home Depot as we come into this first break. So Walmart, they're going to open up about $6. That's about 5% for that equity. And you jump over to Home Depot, they're right now negative by about $2 on that. Did you hear that, folks? Did you hear all that action? Now, they got a spike higher on the numbers, okay, but then quite a little quick pullback. 311.74. We're just back to where we were yesterday, so some pretty tame action for Home Depot. Walmart to the upside. We jump to Lowe's. Lowe's gets a little negative action. Market's down a little bit. I'm guessing, though, that's you see the jump around that correlates to Home Depot. And Target going to be positive with Home Depot higher. Target positive by $4 ahead of their numbers tomorrow. Stay tuned, folks. We got a lot to talk about. We'll be right back talking to our man Kevin Hincks from Fast Market. We'll be right back.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got right now taking a look at Target. We're up a bit, $4. We got Walmart up as well. S&P is negative by 11. NASDAQ negative by 36. Two big companies out with their numbers, Walmart and Home Depot, both of them beating on the top and bottom line, and they stick with their guidance. I mean, what about all that talk of, hey, just wait until all the companies bring down their earnings, right? What happens when they have all the revisions? What happens to the PE multiples if the earnings get slashed? Well, not so much the case so far. You do have Home Depot down marginally right now as it's jumping around $3.10, down a few dollars as Walmart's higher and Target as well. Let's jump over to our man Kevin Hincks. Every trading day, folks, 12 noon Eastern time, right here on Tiger TV, the TD Ameritrade Network with Fast Market. Your hosts, Kevin Hincks and Tom White, they break down the day's market action. They walk you through 3 different trade setups, folks. All of them talking about options, all of them with defined risk in a market that's got some serious volatility, man. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yeah, day one of the Walmart, Target, Home Depot, Lowe's earnings releases. So far, kind of what we thought. A little bit of a relief rally in Walmart, a little bit of, a nice beat on earnings per share, nice beat on revenue with Home Depot, but a bit of weakness maybe in their guidance towards the next quarter has got that stock a little weaker, but a nice relief rally going on here in Walmart as, after missing bad last quarter and guiding lower during this quarter, they came out with a pretty nice beat on revenue, beat on earnings per share, and here's the good news and bad news from Walmart, Tommy. They're picking up market share in terms of groceries. But groceries are the lower margin than apparel and electronics. So they're picking up market share, nice beat on revenue, but it's the lower margin products as, inflation hitting, possible recession hitting, people going for the lowest price products in terms of groceries. So all things considered, pretty good numbers. A nice relief rally here out of Walmart. Target is also up along with Walmart pre-market, so they'll move together. Home Depot and Lowe's will move together. Target and Walmart will move together. It'll be fun to trade these out today, Tommy.
It is pretty interesting how we get the two big behemoths in each segment, right? You got Walmart, the king retailer out there. You got Home Depot, the king when you talk about home renovation or whatever it be. And then right behind them, you get number two almost, Target, and then you get Lowe's back to back. And it's got to be tough when you deal with the good expectations being second, right? Now Target's got a little bit of the bar just got raised for them. Probably, I'd say it almost got raised for Lowe's, as in pretty decent numbers for Home Depot. We've seen a lot of companies miss in pretty dramatic fashion. I referenced it when I even talked to you. So much for the earnings revisions, right? I mean, pretty strong guidance from Walmart. Home Depot, nothing too dramatic out there. You do talk about groceries, man. I've talked about it on my program. I was a huge fan of Instacart over the last 2.5 years, really during the pandemic, right? We had pregnant, and you have a baby on the way, you get the pandemic, then just life with a baby and all that stuff. But inflation on those groceries, man, I am super hyper aware right now, because that grocery bill with the family, man, let that thing get out of line by 10 or 20%, and whew, you're talking about some big money, man. We take that, Kevin, the S&Ps, man, we had 4,300 yesterday. We get some other retail companies out, TJ Maxx. We get John Deere on Friday, Foot Locker back to retail on Friday. With that in mind, we got a little bit of a lull of Fed economic numbers. I feel like we're deprived when we got the jobs number, then we got CPI, then we got PPI, a little bit of lull on that data ahead of the Fed. What are you looking for right now as we have a little bit of a lull of that hardcore economic data and just wait kind of with the Fed meeting more than a month away right now?
Yeah, it's interesting. Yesterday's big economic data was really China data, right? And the market starting the day weak because of the data coming out of China. And then the market, I think, realized, or tried to realize, that right now as we sit, even though the two biggest economies in the world are linked, China's going a different direction than the U.S., right? U.S. is raising interest rates and reopening. China really isn't there yet, and they actually lowered interest rates yesterday. So it's a pretty interesting diversion between these two massive economies. That was yesterday. Now, today we get some housing data. We get housing every day this week except Friday. But tomorrow we'll get some retail sales, and we'll get Fed minutes. So nice. In between those meetings, you're right, there's quite a while till the next Fed meeting. But we'll get minutes tomorrow, which, though I say this all the time, it shouldn't move markets. It always does, Tommy.
Yeah, things, you never want to say it's different this time, folks, but the Fed minutes this time, they feel like they're a little bit more important than normally, as in things are a little different with the Fed meetings and how important they may be as we come down the line. Yeah, in that move yesterday, I had been talking about, Kevin, the CPI numbers. We've talked about it, how energy's had such an impact on it. And in my brain, I said, how is energy, though, going to continue to go down? How's the price of crude going to continue to go down, or even commodities? And maybe a China slowdown is an ease there. We saw some of it yesterday with crude going down to an 86 handle, 86, 82. We're still under $90 right now. With that in mind, what are you guys talking about on Fast Market at 12 today, Kevin?
Well, we'll cover the second half of those earnings that we talked about. Lowe's in the first segment. Then, like Foley will do a presentation on Target, and we'll trade Target. And then you already mentioned TJX.
Nice.
We'll trade that retailer as well. So retail online today: Lowe's, Target, and TJX.
Pretty cool. And as I pull them up on the Thinkorswim platform, TJ Maxx, you got about a 5% move priced into that. Now, this is as of the close yesterday. Lowe's, a little bit less than that, even 4%. Maybe not too much volatility on some of these retail stocks, but always interesting when you go second, as in Target, going to have a little bit of a lofty expectation after Walmart delivers pretty good. And they're clearing some of that inventory, Kevin. Did you see on there as well? I saw something on Walmart that in terms of just how many let me see if I could get it in terms of just cargo, in terms of the boxes that they had of their retail, clearing some of that retail. So maybe that's something. Yeah, selling through. Let me get it for you. The inventory levels were up 25.6% in the second quarter, but they cut. Forgive me, I lost it, man. But they've cleared through, selling through the excess inventory. Anyway, I should have ended a little bit stronger. I apologize. Kevin, we appreciate the conversation, man, the education. We'll be watching today. Lowe's, Target, TJ Maxx, man.
Thanks for having me on, Tommy. Have a great day.
Always a pleasure. Folks, tune in 12 noon Eastern time today. Outstanding program. If you're looking to trade options, folks, if you just even trade equities, understanding how options move gives you a ton of insight to how the market is pricing probability events, or would it be understanding options, even if you're an equity trader, folks. I would advise it highly, and they'll be going over 3 equities, and you've seen the movement we had. And folks, the volatility is not gone in this market. You know, I was talking to a friend yesterday, and they were saying, yeah, you know, I haven't been trading at all in this bounce, and I missed it all, and you know, I just can't believe it. I said, man, volatility is not going away. It's not going away, folks, all right? The S&Ps aren't going to ride into the sunset at 4,300 and creep up 5%, okay? Now, that is an opinion. That's not a fact, all right? But we have a VIX at pretty elevated levels, and you just heard Kevin with some great analysis, man. Even, you know, it feels like a lull. It's not even close to a lull. We get retail sales. We get Fed minutes tomorrow at 2 p.m. Eastern time. I was thinking about that yesterday. Somehow, that could be a big one. You're going to get some insight into what they were talking about at their last meeting. We do have a little bit of a lull in terms of that hardcore economic data for inflation that the Fed will be watching. But the next Fed meeting is September 20th and 21st, I believe, or 21st, 22nd. It's the 3rd week in September, folks. We're going to have a ton of data coming out for August in early September before that price point, time in that time. Stay tuned, folks. I'll be right back.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&P right now negative by 9 points. NASDAQ 100 negative by 43. The Dow negative by 31 right now. You open pretty decent. Let's jump over to the stocks with earnings right now. You jump to Walmart. There's a pop for you, up 5% on that equity, up to 139. Yeah, pretty remarkable. Kevin talked about it, man. You get the revision, okay, which is that drop down we saw a few weeks ago now. That was a Monday evening. They come out with a revision. You trade down. That's the week that the stock market surged. Amazing that we're talking about. That was like 3 weeks ago. I remember that, man, right? I mean, it's only 3 weeks ago, but you get it all back by the end of that week. And amazing that you revise down, and they are 3 weeks later, okay, on the Tuesday that Walmart opened at 120. If I told you that it'd be pushing 140 by the time they come out with earnings, a stock like Walmart is not usually so volatile, folks, okay? But nonetheless, it's charging higher even on the open. You got markets charging higher, man. You can't hold a good market down. S&P's right now negative by just 7. Dow positive by 18 points. NASDAQ positive by 46. Let's see how Home Depot's trading. There you go. I thought those were pretty good numbers, man. Yeah, up to 320. Home Depot up 1.6%. I mean, folks, the risk right now, all right, companies, I mean, we're seeing companies that make $19 billion, like NVIDIA, okay, come out and revise their guidance to the tune of $1.5 billion miss, like 15% of their revenue miss sometimes. What was that? I think that was going back to, the Monday morning, August 8th, okay? NVIDIA gets it all back. Yeah, well, we've had quite a week in the market, okay? But those are the types of earnings misses we're seeing right now in a big way in terms of revenue, dramatic. NVIDIA's gaming segment, they revised down from $3 billion in revenue to $2 billion in revenue. Yeah, okay? So when you have a company like Home Depot that's able to deliver earnings, deliver revenue, and reiterate their guidance, which is the kicker, because so often, okay, even the analysts that are bearish right now, I don't know who's going to be right or wrong, right? I'm trying to make probability estimates of who may be right or wrong. And even a lot of analysts are saying it's going to be the end of this year as prices ramp up, costs ramp up, that you're going to see those earnings revisions of what was estimated this year. Well, we'll see if it plays out, man. Home Depot, Walmart, they're doing well. Target up 3.5%. They're going to have some lofty expectations coming down the line. Now, stuttered a little bit talking about to our man Kevin Hincks at the end of that conversation, but the line I was trying to pull, it was right in front of me. I just couldn't read quick enough, but Walmart reduced the number of shipping containers in its system by more than half from the first quarter levels to bring them much closer to historical averages. They're making good progress selling through it, okay? Found other areas in the business to cut costs, but that's half, right? And they said Walmart will have a cleaner inventory position by the time Halloween rolls around. Folks, that's 2.5 months, man. They expect a strong finish to the back-to-school season. We'll quickly transition to the holidays. We just did back to school in Florida, folks. We start crazy early. Last Wednesday. What is that on the chart here, on the calendar? Last Wednesday is August 10th. August 10th, school starts in Florida. Now, they get out earlier. I don't know why they do that. Why is there a difference? If anybody knows, let me know in the den as to why the calendars are so different in Florida versus up in Boston. Because, good old Boston, man, I was always waiting for Labor Day, right? That's when you had, as in not waiting for it, but that's school starts after Labor Day, right? Memorial Day to Labor Day. That's summer, man. Not so much the case in Florida. So they already started. So we've already seen it. We've been back to school shopping, man. That's the way it goes. Target got some business in my household, I'll tell you that. Walmart gets some business occasionally. And they are growing the groceries, but, they're going to be the shopping of everything because they can service everything to a certain degree. All right, let's jump around to what else we have going on in this market. Got to mention this one, man, because this is not how bear markets work, folks, but bull might be back, as some of my friends and I were joking. Andreessen Horowitz, they are betting on Adam Newman. Now, he is famous from WeWork, okay, to the tune of $1 billion. Now, do they say it in here? Where is it? It's $1 billion. Is what they have of valuation. I'll have to get the funds. I was reading about it last night. He obviously understands housing. This one is going to be in apartment buildings, I think. So maybe the future is everybody just pays a monthly recurring fee to have an apartment. Not sure that's good for society, but nonetheless, I think it's $1 billion valuation they gave him, and it looks like maybe that he's got $350 million already invested in there. Called rent. Yeah, well, it's called rent except for if you have only public companies owning everything, then yeah, you're renting. But if our society is going to be a WeWork structure of housing, I'm not sure that's good for members of society when home ownership and home equity is one of the best ways for people to actually achieve wealth on some degree. If you're renting, folks, that money's never coming back. You know, a mortgage payment. Equity, you're paying down the interest, which at the beginning, and then they're just going to rent it out. I mean, that's what we're seeing play out to a small degree right now, which is why we have a housing crunch. And, you know, a lot of people who are not in the financial business that doesn't realize how those single family homes can just get securitized, and then there's actually no reason to ever put them back into the market because they'll be earning a yield. And yes, you get to a point like 2008, I guess, or something like that could recoil that market, which is what happened. Boy, some of the properties, man, I was looking at it yesterday in terms of St. Pete. My dad is brilliant and quite a call, man, creating that fund in 2008, 2010 and putting it in Florida, because some of the numbers, folks, in St. Pete, in Tampa, just staggering, the levels they went to. But that's what happens when you have a reset. Nonetheless, betting on him in particular, a bold bet. Nonetheless, he did it once. They're going to believe he can do it again. And we'll see if that plays out. The company is going to be called Flow. And there's pretty much no information quite yet how it works. And they'll be kicking things off, I think, in 2013 or something like that. All right, what else we got? Apple, they're going to be laying off recruiters as part of its slowdown in hiring. 100 recruiter contracts were let go in the past week. I wonder how many recruiters, right, are hiring people. Like, what's the hire rate per recruiter? Because I mentioned a recruiter. You got a full-time recruiter, man? That's a lot of work that person should be doing on a yearly basis for that company. They're contract-based recruiters, all right, about 100 of them, responsible for hiring new employees at Apple, and the cuts underscore that a slowdown is underway at the company. So are they going to be letting people go, or are they just not going to be hiring anybody right now? The move to lay off workers is unusual. They employ more than 150,000 people. But yeah, many of the other tech companies out there either slowing their hiring plans or cutting a little bit. And yeah, Apple employs contract workers for tasks such as tech support, customer service, a majority of what they do. You can have contract workers, fewer benefits, right? The kicker of why companies go for that route. All right, folks, stay tuned. We come back. We'll be talking a little bit of some of the other equities that are moving right now. We'll take a look at it. We'll take a look at the Dodge Challenger as well. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get this market trying to get positive right now. You get the S&Ps just negative by 3 points. You take a look at the 5-minute chart. We were just up there at 42.98, right at the highs. We had about 8.15. There's your pop on the open. We opened at about 42.86. We're just up a bit, negative by 3. NASDAQ, negative by 60. You got the Dow, catches a bit up to 33,908 right now. Crude, 89.49. The price of crude still under $90. Gold, strong dollar, weighing on gold, $17.92 right now, just under $1,800. And we jump to notes and bonds. We got a little bit of lower price and higher yield coming at you. Pulling up that yield, taking a look at it. We're talking about a yield right now of 2.85%, just that quick. The moves in the 10-year, man, and just yields in general. That's all you need to watch, folks, to understand that volatility is here to stay right now, at least for right now, right? These types of moves in the 10-year, man, just mammoth moves. Now you take a look at the recent pullback we've had. So you had rates June 14th, what were we pushing? 3.5% at that level. You trade from 114 to 122, and all we've done is pull back a 382. So keep your eye on about the 119 price level. We're only 7 ticks above that level. That also correlates to a high we had in the middle of July, and you're talking about 117.5. is about the area that you could really see some weight, 117.06 to 117.5 if we do back down to that area on the 10-year. All right, I mentioned the Dodge Challenger, the Dodge Charger. If you want one, go get one ASAP because they're going to continue them. Both muscle cars next year. Dodge's going to discontinue the gas-powered Challenger and Charger. They were resurrected in the mid to late 2000s. Amazing. Feels like that was recently. Remember when they put this car out recently? Mid to late 2000s. My goodness, it's 2022. Yeah, so fuel economy, it's a problem. My dad's talked about it, man. You know, you go out and buy some nice gas powerhouse, you know, roadsters or something like that, man, 50 years or something like that, when there's no such thing. I imagine they're going to be collectors in a big way. And so, yeah, they're not going to be around as of next year. The days of an iron block supercharged 6.2-liter V8 are numbered, referring to engines like those, but the performance of those vehicles generate is not numbered. Yeah, they're still going to be around. All right, what else did I have pulled up here? California, man, heat. Talked about it yesterday in terms of a study by firststreet.org talking about the heat that's going to be prevalent across many, many cities and states by the year 2050, but you don't have to wait that long, folks. California, 109-degree heat. They will test the grid. You're talking about records in certain areas as recently as today. and that's the second pocket of extreme warmth forecast for Western Washington. You take a look at where this thing is, quite a swath of territory in terms of where you may hit. Sacramento, 105, just shy of the record for the day. Redding, 109, which would be a high for the day. Demand expected to peak Monday. Talking about energy. And, you know, the tough part about this, I was reading through this, is in every summer there has to be an element of luck, and no wildfires affecting the transmission grid. There's so many elements out in California that play a part of these energy crises that they have almost on a yearly basis, it seems. No major plant outages, no natural gas fuel disruptions. For now, power supply shortfalls appear unlikely, but boy, it's got to be unfortunate. Not sure why we have to rely on luck, folks. We could shore that all up. The heat wave. This is the kicker, which is why it tied me back to yesterday talking about, you know, pay attention to the climate change going on, folks. The heat wave threatens already severely limited water supplies for towns, farmers, and wildlife throughout the Central Valley. That region, 3/4 of California's irrigated land, is what they account for, and produces 25% of all U.S. food, including 40% of the nation's fruits and nuts. You have a heat spike going on. You have a water shortage. I talked about the lakes out there in Nevada, Lake Mead, okay, that they're coming down. The intake valves for Lake Mead to supply water are so low that they've had to build new intake valves that were only completed a couple years ago. Well, you can't just build a new intake valve the next time, folks, because they're almost at the bottom of the lake as far as they can take it in. Some pretty startling numbers when you look at the heat that we have. And, man, Florida, we're going to face it in a big way. All right, what else do we have up here? Yeah, this was an interesting one. So this is an article on Bloomberg this morning. It's quite an article. Don't have time to go through it all, but some of the graphs they had up here in terms of just the forecast versus where we are now, when you look at where we are. So keep in mind that things change rapidly, folks, okay? Now, when you go out to 2021, 2022, 2023, what this is talking about, okay, is this is talking about the forecast by month issued. Okay, a year ago, March in 2021, the forecast for the Fed was here, the bottom solid yellow line. We got to 2%, maybe. Okay, yeah. Then what happens? June. Oh, well, it's saying we're going to forecast in June of 2021 that we're going to rise, but then come back down. The point being, without spending too much time, look at how every meeting, March, June, September, okay, December, March of this year, and then June, okay, every line has shifted upwards. And yeah, what happens is by 2023 and 2024, they all can get back in line. But it's almost 2023. And I don't imagine with the numbers we have right now that we're going to be back down to that number just that quickly. If anything, it's illustrating how quickly things can change in terms of where they think they're going. The Fed funds rate, the midpoint of the target range, I mean, just a similar graph in how things spike, okay, where you were. In March of 2021, yeah, they were looking for actually nothing, okay? This one up here was talking about Q over Q4 change in the PCE, okay? This was talking about where they saw inflation. To sum things up, I got confused for a second. I was like, what is this rates? That's where they saw inflation, okay? They all think it's coming back down, but they all thought it was going to be down, is the point. Where do they see rate hikes? Well, they all thought they didn't even need any. You didn't really start spiking until September last year. They said, hold on, we're going to rise. Well, guess what, folks? We're way above those levels in terms of where we are right now. So keep it all in mind as you watch the market and as you watch the Fed and as you think we have everything solved, because we thought we had everything solved a year and a half ago. Everything coming into the late part of this year, the comps were supposed to be so friendly that we were supposed to get out of inflation. That was why transitory was the word of the year, because the comps were going to help us, folks. Even if we got some crazy inflation, that was due to supply chain issues. It was due to COVID shutdowns. It was due to imbalances in supply and demand coming out of COVID. Folks, we're in August, right? The numbers are right now, and we're still dealing with 8.5% CPI. We're still dealing with food rising 1.1% on a monthly basis. And even with food rising 1.1% on a monthly basis, Walmart's making plenty of money, which says a lot, I think, on this economy in how some of these companies can handle that in a big way. So it's going to be interesting because the Fed's going to have ammunition, folks. Market's at 4,300. The market's trading at prices that it was trading at in the fourth quarter of last year at the end of a 12 to 14-year bull run. It could handle some higher rates if the persistence of inflation stays, which we're going to see what happens. We still got crude sitting at about $90 right now, but that's off the highs of 122, and 122 is June, right? Where was crude in the month of July? It was dropping almost the whole month from 110 to finish the month out at about 96. So that's going to be a big help in terms of where those numbers come, but we're sitting at 89 if we stay at $90 for the month of August. Stay tuned, folks. We'll be right back to finish up the show.
TFNN has just launched their new trading room, the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. Take a look at the crude contract sitting right now at about $90, man. The trend, though, is lower prices. To finish up that thought, because it was a little bit rushed there. So you had the July CPI and PPI numbers, CPI in particular, helped a lot by energy, okay? July was compared to June. Well, June prices were horrendously high across the board. You had June having crude sitting in the middle of the month at basically highs of 120. The middle of the month of July, you were sitting about 100, maybe just shy of that number, okay? We have dropped again. It is now, August has kicked off under $95, and we're already more than halfway through the month, and we're under $90. So that will be an impact that we'll get in August that will take us through the numbers for our next Fed meeting. Okay, so keep your eye on some of those energy prices, man, because I don't imagine you're going to see food and shelter bringing that CPI number down. We had flat numbers on a month-over-month basis. If that number rises, you could see a little bit of a spook in the market. Energy going to be a big component of that in terms of how that plays out for the August energy prices that go into CPI, and we get those numbers ahead of a September Fed meeting, which I believe is somewhere around September 20th, 21st in that month. So yeah, important across the board, crude. We jumped to some of the FANG stocks this morning. Amazon, quite a run Amazon has had. We're basically flat this morning. Microsoft shares down about 0.5%. Apple, the big dog, down about 0.5%. How about the airlines? We'll finish it off with an airline story. American, they're down 0.6% right now, but American, they're going to be buying 20 supersonic planes from Boom. Now, United's already bought 15 of these planes. I say bought as in they've put in orders. They get them in about 3 to 4 years. But interesting, the future marches on, folks. They're going to fly at Mach 1.7 or 1,304 miles per hour. They're talking about transatlantic and trans-Pacific flight times. You fly to Europe, you fly to Asia, you cut that. What does a normal plane fly at? 3, 4, 500 miles an hour, something like that. So yeah, 1.5 times. For example, a flight from Seattle to Tokyo, which typically takes 10 hours, talking about 6 hours. The planes, they're going to fit about, there it is, pretty cool, 65 to 80 passengers. Not bad. All right, folks, stay tuned. We got our man Basil Chapman coming up next. Markets, S&P negative by 5. Thanks for starting your day with me, folks. Stay tuned for Basil. He's up now.